Hi guys, and welcome back to Nifty Challenge. So in the last two videos, since I've taught you the trend line system and finding support and resistances. So in continuation to those videos, what we learned in the last two, first one was an ascending broadening video which I showed you. Now this can be a bullish as well as a bearish breakout. The second one was a descending broadening channel. The next channels is a set of channels that is basically equidistance channels. So this one is also ascending and descending, but they are equidistance channels and also very similar. See, you can use either of them or all of them in a together part. But you see what happens in this kind of a channel is the up and downs are like it's an equidistance. See this, the up and down resistance line that you will form, this will be equidistant. It will not be broadening or it will not be converging. So this is the second part and of this basics of this continuation patterns. Once we finish this topic, we will come to the another one that is very interesting topic, which is about wolf waves and about the rising wedge and descending wedge and all these patterns, also similar to trendline system, but it is important that you learn these things first. And when you come to wolf wave, I can easily explain you what are the difference and how to catch the difference between these things to use them for trading. Now let's come to this pattern. So see, in this case what you see is basically they are equidistant patterns. So you will be able to identify same point number 1, point number 2, point number 3, 4, 5, 6, 7, and then a breakout happens. Now this channel can either be a bullish or it can be a bearish one. And there is something very important in all these patterns which I have told you, and I have not basically forgot to tell you in the last two videos. See, these patterns are known to many people. It's not that I am teaching you and you will learn, so now you will be able to make benefits. So there are thousands of people, hundreds, millions of people who already know these things. But there is something very important, that what market does is that market always makes these patterns, and before making a move, it makes a insider trading. This is what I call it as a trap of the operator. Before giving a fall, it will trap you once, so it will confuse you that whether the pattern you followed was right, or it will not be able to give you profits. This definitely happens in 99% of the times on most of the patterns that you will see. So if you see my previous videos, I will just show you these things also. Just a moment, let me go to the channel page and I will show you these things. So see, if you remember these trendline strategies where I showed you these things, next high is higher. Just a moment. So see, it gave 1, 2, 3, 4, 5, 6, 7. And before it made a fall, if you zoom it out, it will come here and it will start giving an upside again, and then it gives a fall. So there is always one trapping area which 100% happens in all the continuous patterns, which I'm telling you from my experience. Now let's come back to these charts. And so in this case, I'm not writing the same things 1, 2, 3, and 4. So what you do, 1, you make a 2, you make a 3, you make a 4, a 5. So on a fifth one, on the support, you can go for a buying. On the sixth one, here when it comes to this trend line, you can go for a selling. Then again, when it comes to 7, you can go for a buying. Then again at the next point, you can go for a selling. So see, right here they will confuse you. It will, here you should have sold, but they will come back up so that it eats your stop losses. This is what happened. This is the March chart, you can easily see, but the fall was massive. But they did one insider part here to confuse you and make you exit and show you something different. Let's show you another similar one. Now you see this is also an equidistance parallel channel. You see what happened, it goes up, goes down, makes a gap down opening, recovers everything, goes up, goes down, up, down, up, down, up, again up. Now here you have made the pattern, then it again goes up, then it again goes down. See, this is just right following my trend lines. I have just joined this and this one, and it is right following. It is touching right here in this area, it is touching right here in this area. Again it gave a breakout here. Now something most important in these zones, how will you buy and sell? I've given you have to buy at point number 5, point number 6, but the most important thing that you must do is monitor the volumes. Okay, let me show you with the volume. How will you decide whether, okay, now the reversal has happened, you should go for a buy or you should continue selling? So in this case, what you do, see, it was forming a pattern forming a pattern. I'm assuming this part is already done and you want to buy in this area. Now see this good selling, again a doji with selling, again an upside. Now you see this area, see the amount of volume in this area. It is a perfect volume. It is giving you 100% buy signal. Even if you buy after this day, you will still get, see from here, if you notice, when you buy next day after this area, you are sure seeing the volumes that now it is going towards an upside, and at least this level will come. So even if you bought here, that is a 10,835, you still got 11,030. It's not a small, it's 200 points on Nifty, is not a small thing. Again, you went on an upside, you see the volumes are low. The next day when the selling comes, the volumes are higher. Now what do you compare in the volumes here is that the volumes are appreciably higher than the previous day. This is very important thing. You should notice the volumes are higher than the previous day. See, the volumes are getting higher, selling is continuing, getting higher, and then volume started reducing. So you are sure that at this time, sometime soon, the reversal is going to come. And then the volumes reduced, and then there is a similar volume but on the buying side. You will not buy here. This is the candle after which you will buy. Right after this candle, when you see the volume of buying are increasing, this is where you will buy in this area and you will get an upside. See, and then again selling comes. Now this is what is insider comes. It shows you with a very high volume that again it is going to fall, but that does not happen. So what you do in this area is you trail your stop losses to this region. Always put your stop losses in this region when you're going on the bullish side, or you put stop losses on this region when you're going on the bearish side. Now what will you decide whether you have to go bullish or bearish? See, it came down as a fall, it came down on an upside, it started giving a sell. Where is it giving you a sell? Right in the middle. What was the last pattern? The last pattern was going on an upward direction. So in this case, you will go only on the upward direction, not on the downward direction, even with this high selling volumes that came. And if you continue on the upward direction, you see the breakout comes and it helps you. So this is an equidistant parallel channel. These are three kinds of channel. One ascending, which is moving on the upside. I just showed you this one. This is ascending part where it is moving on the upside. There is one which is descending, which is in this direction. And there is one which is parallel, which is straight and just consolidating in this range. In that case also, after point number 6, point number 7, you can always get a breakout in either direction and use the volumes, and you can find out whether you should go on the buy side or you should go on the sell side. Now let me show you more examples. You can use this. I've mentioned the things here, some of them to note down for you. So it is an ascending continuation pattern I mentioned. Even the descending is the same thing. It is an equidistant continuation pattern. Higher highs, lower lows are nearly equidistant. So you have equal distance in between this 1, 2, 3, 4, 5, 6, 7, 8. You see the distances are equal. The time period is nearly equal. So you create point number 1, 2, 3 and 4 as supports, and then use these supports to buy and sell. And what you must do, you must watch the volumes in this case. I hope you will use this pattern. I hope you will take it to your advantage, and I hope you will be able to take very good advantage of it. See, Nifty formed this pattern. It's an ascending continuation pattern. It was equidistance formation in these areas, and then a breakout happened. It gave a sell. Now this is an insider area which actually happened, but then the upside again continued. You can use this on the stocks, do some homework, take out some work, and we are finished with this basic continuation patterns. And I'll definitely move to the wolf wave next after this. I'm not discussing the descending and parallel and this individually in a separate video. Let's move to the next topic after this one. Thank you guys. Thank you so much. Hope you will have a wonderful day. Thank you.